All right, listen, if you're a silver investor, tomorrow is not the day to just wing it. Because after a market starts acting like this, big swings, fast reversals, silver moving harder than gold, you need a simple plan you can actually follow in real time. So this is my Thursday silver playbook. Not financial advice, not hype, just a clean if this then that framework. And I'm going to give you 3 levels that matter, why they matter, and what each scenario usually leads to. So you're not making emotional decisions when the market starts moving fast. Now, silver today is sitting right around $83 an ounce after a strong move in the last day. And whenever silver is hovering around a big round number after a sharp move, the next session often becomes a decision day. Not because the universe cares about round numbers, but because traders do. Round numbers are where stop losses cluster, take profit orders cluster, and where algorithms love to test liquidity. That's why you'll see silver act almost dramatic around those zones. So here's the core idea for Thursday. You're not trying to predict the future perfectly. You're trying to identify the 3 levels that separate 3 different market behaviors: continuation chop and shakeout reversal. And once you see which behavior you're in, you stop guessing and you start responding. We're not looking at typical volatility here. This comes down to 3 data points. The first level is the hold level. This is the level where the market proves that today's move wasn't just a one-day pop. For tomorrow, that hold level is basically the current zone around 83. Here's what holding looks like in normal human language. It means silver dips and buyers show up quickly. It means the sell-offs don't snowball. It means the market is willing to pay up to own silver, even after a big move. If you see silver trading around 83 and every dip gets bought back fast, that's a message. That's the market saying, we're building a higher base. Now, does that guarantee a straight shot higher? No, but it changes the probabilities. In this environment, holding the breakout zone often leads to a second push, sometimes not immediately, but after a short, frustrating period where people get shaken out. So if silver holds this zone tomorrow, the main takeaway is simple. The trend is trying to continue, and weakness is being absorbed. Now, the second level is the line in the sand. This is where Thursday gets dangerous for people who don't have a plan, because there's usually a point where the market stops being a dip and starts being a drop. This level is typically just below the hold zone, where you start seeing the move fail and the tone shifts. Let me explain how it feels when you're watching it live. At first, the pullback looks normal. Then you get a bounce that's weaker than before. Then the next drop happens faster. And suddenly, the market isn't just drifting lower. It's falling through pockets of liquidity. That's when you see the emotional posts, the panic, the what just happened reaction. And that's why you need this second level. Because if silver loses the line in the sand tomorrow, it usually means one of 2 things is happening. Either the market is doing a classic leverage flush, shaking out weak hands, or the broader macro backdrop is turning against metals temporarily. Dollar up, yields up, risk sentiment shifting. And in both cases, the move can accelerate. So the purpose of level 2 isn't to scare you. It's to keep you rational. It's to stop you from confusing healthy pullback with failed move. Now the third level is the reclaim level. This one is underrated, and it's where a lot of the best opportunities show up, if you have the discipline to watch it properly. Reclaim is when silver dips below a key zone, everyone gets emotional, and then it snaps back above the same zone. That is one of the most important tells in a high volatility regime, because it reveals who's actually in control. If silver drops below the zone, shakes everyone out, and then reclaims it, that's often a sign the sellers just exhausted themselves. It doesn't mean straight up forever, but it often means the market just ran a stop hunt and then reset. So tomorrow, you're watching for 3 different stories. Story 1, hold. Silver stays supported around the current zone and builds a base. Story 2, break. Silver loses the line in the sand and the selling starts feeding itself. Story 3, reclaim. Silver breaks down, flushes, and then snaps back above the key zone. Now, here's what mainstream media missed. The 3 levels framework isn't about being a trader. It's about avoiding the 2 biggest mistakes that destroy silver investors. Mistake number 1, chasing strength. Silver rips, you feel late, you buy emotionally, and then you get hit with the inevitable pullback. Mistake number 2, selling weakness. Silver dumps, you feel stupid, you sell emotionally, and then it snaps back the next day. Volatility is designed to pull those 2 mistakes out of you, so you need a process that keeps you from reacting like the crowd. Now let's layer in the bigger context, because these levels matter more right now than they would in a sleepy market. We're in a regime where expectations around rates, the dollar, and liquidity can change fast. When the market is in that mood, silver becomes a pressure valve. It moves harder than gold. It overshoots. Then it mean reverts. Then it overshoots again. That's what high volatility looks like. And here's why Thursday matters specifically. After a big move, the next session often becomes the confirmation or rejection day. Confirmation means buyers defend the level and the move becomes a trend. Rejection means the move fails and the market tries to unwind the excitement. And the unwind can be brutal, not because the long-term story is dead, but because the positioning got ahead of itself. Now I want to do a quick historical parallel, just to show you why these decision days matter. History is repeating itself. Think back to 2020. You had days where metals looked unstoppable. Then the very next day, you'd get a violent liquidation. Then the week after that, the trend would continue anyway. That's the hallmark of a high volatility regime. The trend can still be up, but the path is jagged. Or think about 2011 silver. The problem wasn't that people believed in silver. The problem was that they believed the path would be smooth. It wasn't. It was explosive, then vicious, then explosive again. So the lesson is not don't be bullish or don't be bearish. The lesson is respect the regime. When volatility is high, your process matters more than your opinion. Let's make this personal. Let me show you the real-world impact. If you've got $5,000 of exposure to silver-related assets, a 3% swing is about $150, not life-changing. But if you've got $50,000 of exposure, now you're talking about $1,500 in a day. And if you're in miners, those swings can be 2 or 3 times that. That's when people start making decisions from emotion, not logic. That's when people start revenge trading, doubling down, panic selling, and doing everything they promised themselves they wouldn't do. So for Thursday, the real goal isn't call the top or call the bottom. The real goal is to stay calm and interpret what the market is saying. Here's the simple playbook you can literally write down. If silver holds the zone and keeps bouncing quickly after dips, the market is leaning toward continuation. If silver breaks down and can't bounce, and the selling starts accelerating, the market is leaning toward shakeout or reversal. If silver breaks down, flushes, and then reclaims the level fast, that's often a sign the flush did its job and the market may try higher again. That's it. 3 levels. 3 stories. And by the way, this approach also protects you from ego, because it doesn't require you to be right. It requires you to be consistent. Look, the question isn't whether Thursday will be volatile. The pattern shows the path. When silver is already swinging hard, the next session often tests the same zone aggressively. The real question is, are you positioned for what comes next? This is educational content, not financial advice. Do your own research. Consult licensed financial advisors before making investment decisions. These are market observations and analytical frameworks, not buy or sell recommendations. But the data speaks for itself. Silver around 83 after a strong move is exactly the kind of setup that creates a decision day. And if you have your levels mapped, you'll be calmer than 90% of people watching this market. All right, before you go, 3 quick things. 1, drop a comment below. Tell me where you're watching from. And give me your prediction. Where do you think silver is headed by the end of this month? 2, if you're not subscribed, hit that button now. I'm putting out unfiltered analysis consistently. And listen, I'm fighting copycat channels stealing this content. If this video provided value, comment "Truth wins" so the algorithm knows you're here for the original. 3, next video drops soon, and I'm covering the one macro indicator that tends to flip metals fast when everyone is leaning the wrong way. It's flashing again. You won't want to miss it. See you there.